This is an overview of the top charts and trends to watch in crypto and a weekly update on the latest at Token Terminal. Hey, it's Oscar here with another episode of Weekly Fundamentals. We introduced a new trending contracts feature to the terminal this week. You can use this tool to find out which contracts and addresses are most active and sort them by chain, time frame, gas used, transaction count, and user activity. This is a great tool for finding emerging trends and momentum shifts in crypto, so proper alpha. Also, do reach out to us if you want to help out in identifying unlabeled contracts or addresses. We will reward you. Now, looking at this table with the time frame of the past 7 days, we can see that the number one trending contract on Ethereum at the moment is XEN, a token that you can mint for free by only paying the Ethereum transaction fee. The contract has used over $5 million worth of gas over the past week, so a lot of ETH has been burned. We can see this as a spike in Ethereum's revenue, so the amount of ETH burned, on Ethereum's key metrics chart. And if we pull up token incentives, so the amount of ETH issued as rewards to validators, we find that the total ETH supply has actually decreased over the past week by almost $5 million worth. Now, whatever your thoughts are of XEN, it's safe to say that it's at least keeping ETH holders happy. And with this increased activity, Ethereum topped this week's earnings leaderboard by quite a margin. Other newcomers to this week's top 10 are Maple Finance and 1inch. You can always explore the full leaderboard and all underlying data via the link in the description. We've also listed a total of 4 new projects to Token Terminal over the past week. First off, Flashbots, a research and development organization that operates a block builder and an MEV boost relay on Ethereum. Second listing was Unidex, a decentralized exchange for perpetual contracts built on Phantom. Third, we have Lens Protocol, which is a Web3 social network built on Polygon by the Aave team. Number 4 is Angle, which is an over-collateralized and liquid decentralized stablecoin protocol. And finally, we have Stakewise, which is a non-custodial staking protocol built on Ethereum. Then on to the top charts and trends to watch this week. Starting off with one of our most recent listings, Flashbots, we put together a chart that shows the amount of Ethereum blocks since the merge that have gone through the Flashbots block builder, which is about 19%. Now, you might be wondering what this Flashbots block builder is, so let me explain. Flashbots has built something called Miner Extractable Value Boost, so MEV Boost, which is an open source middleware run by validators to access a competitive block building market. MEV Boost was built to serve as a solution to the threat that the economics around MEV present to the ongoing decentralization of proof-of-stake Ethereum. With MEV Boost, validators can access blocks from a marketplace of builders. Builders produce blocks containing transaction order flow and a fee for the block proposing validator. Separating the role of block proposers from block builders promotes greater competition, decentralization, and censorship resistance for Ethereum. Also, validators running MEV Boost maximize their staking rewards by selling block space to an open market of builders. Based on current traction, so the fact that almost 1/5 of blocks post-merge have gone through the Flashbots block builder, it looks like a clear product market fit has been found. On average, the validators of these blocks have captured around $300,000 worth of fees per day. Currently, Flashbots does not take a cut of any fees generated. The lending protocol Compound's price-to-sales ratio, so the fully diluted market cap divided by annualized revenue, has started to trend up since June this year. Compound is currently valued at a price-to-sales ratio of 219, while all other major lending protocols' price-to-sales ratios are sitting between 50 and 70. Although Compound kicked off 2020 with over $5 billion of daily borrowing volume in January, this has since dropped to just above $900 million in September 2022. Over the same time period, Compound's revenue has relatively decreased even more than borrowing volume, from around $80,000 to $6,000 per day. As Compound generates revenue by taking a cut of the total interest paid by borrowers, we can conclude that the average interest rates have decreased since June. The interest rates on Compound are determined by an algorithmic model that sets a money market's rates based on supply and demand. Borrow rates are made up of 2 components. You have the base rate, and then a multiplier tied to a utilization rate, which is the percentage of money borrowed out of the total money supplied in a specific market. As demand for borrowing decreases, interest rates follow. And due to this decrease in demand for borrowing from Compound, the protocol has captured a much smaller portion of total borrowing volume as revenue over the past months compared to earlier this year. Other major lending protocols have not seen as sharp of a decline. For example, Aava's daily borrowing volume decreased from around $8 billion to $3 billion over the same time period, while revenue only dropped from $100,000 to $30,000 per day. After forking Uniswap and launching a vampire attack to attract liquidity and users, SushiSwap has paid out over $830 million worth of Sushi tokens to try and challenge the current market leader. However, at best, Sushi has only achieved around 42% of Uniswap's quarterly trading volume, which happened in Q1 2021. And as of today, SushiSwap's trading volume only represents about 3% of Uniswap's when looking at the data from Q3 this year. That being said, although Sushi loses out to Uniswap in terms of trading volume, they've generated over $105 million in all-time revenue via the 0.05% cut that the protocol captures from all trades. The same number for Uniswap is zero, as they've yet to turn on a protocol fee switch, so all fees paid on the exchange go to liquidity providers. Sushi has been constantly introducing new innovative product features and business lines, expanding the protocol to much more than a decentralized exchange. However, although moving fast, their biggest shortcoming has been a lack of management. After Sushi appointed a new CEO earlier this month, it's definitely worth keeping a close eye on whether they can hold their horses a bit and put Sushi back on track. Crypto index protocols currently have around a total of $215 million of assets under management. This is down from just over $1 billion in Q4 2021, which was the best quarter for index protocols. Set Protocol is number 1 in terms of assets under management, with Index Cooperative following closely behind. Looking at the composition of Index Coop's assets held, as of October 2022, the majority of funds has been deposited into the DeFi Pulse Index, which is a basket of DeFi tokens, ETH Flexible Leverage, which is an index that allows for safe 2x leverage on Ethereum, and finally, Interest Compound ETH, which is an index of yield-bearing forms of Ethereum, such as Lido's ST ETH. And there you go, a recap of another busy week at Token Terminal and 4 charts and trends to keep an eye on. I hope you found this valuable, and make sure to head over to tokenterminal.com to create a free account and dive even deeper into the data. I'll see you next week.